What economic factors are making multifamily investments more challenging right now in the current market?
Well, there's still deals out there to be had, but they're harder to find because there is a lot of competition in the market. There are a lot of people training people how to go out and be multifamily investors. So for any given deal, there could be multiple people who are looking at it at the very same time as you. And also, of course, we have the interest rate fluctuations, which and the sellers' expectations haven't necessarily caught up with the interest rate increases, so that sellers are still hoping to get their top dollar because they do see competition in the market, and the interest rates are still high, which makes it challenging for people to find deals that are viable and actually offer a good enough return to pay their investors a healthy return and also themselves.
This is the Real Estate Vibe Show, and I'm your host, Vinki Loomba. Today, I have a very special guest, my very good friend, Kim Taylor, with me. Welcome to the Real Estate Vibe Show, Kim.
Hi, Vinki. Thanks for having me.
Of course, well, I was delighted to have you, Kim. A little bit about Kim. Kim is a nationally recognized corporate securities attorney, speaker, and a number one author. She's an Amazon best-selling book, How to Legally Raise Private Money. She's a founder of Syndication Attorneys PLLC and investormarketingmaterials.com. And she's a very, very responsible attorney for hundreds of security offerings for real estate entrepreneurs who are raising money from private investors. So today we'll be discussing smart deal structures scaling beyond multifamily. With market shifts, rising interest rates, and tighter lending, savvy investors are looking beyond traditional multifamily to diversify and maximize returns. Alternative asset classes such as self-storage, mobile home parks, industrial, and build-to-rent communities offer strong cash flow, lower competition, and recession-resistant opportunities. In this episode, we'll explore why now is the time to expand your investment strategies and how to go beyond multifamily. Because we are hosting a summit, Go Beyond Multifamily, on June 6th and 7th to introduce investors to all these other alternative classes. So before we dig deep into that, Kim, I wanted to ask you this question, what economic factors are making multifamily investments more challenging right now in the current market?
Well, there's still deals out there to be had, but they're harder to find because there is a lot of competition in the market. There are a lot of people training people how to go out and be multifamily investors. So for any given deal, there could be multiple people who are looking at it at the very same time as you. And also, of course, we have the interest rate fluctuations, which and the sellers' expectations haven't necessarily caught up with the interest rate increases, so that sellers are still hoping to get their top dollar because they do see competition in the market, and the interest rates are still high, which makes it challenging for people to find deals that are viable and actually offer a good enough return to pay their investors a healthy return and also themselves.
That's true. And also the investors are getting a little bit antsy too because of this rising interest rates and tighter lending. It's affecting all over the real estate deals, but especially for the multifamily deals for the operators who got in early on, and then they got the maybe better rates, and now they are at a verge where they need to refinance or need to pump in more money. And a lot of deals are hurting too in the market. So investors are kind of sitting on the sideline because they do not feel confident about the deals. Are you getting kind of similar kind of investor sentiment?
Yeah, I've been to multiple conferences just in the last few weeks, and I'm hearing a lot of that there's a sense that certain investors are sitting on the sidelines and just, waiting to see how things shake out. Of course, we've got a lot of changes going on with our federal government, and even a change that we're going to talk about today that could be favorable for investors. But we're just seeing, people are just kind of nervous. There have been a lot of capital calls on a lot of deals, and investors are just kind of, it's a little more challenging to raise money right now, is what I've been hearing.
That's true. It's not just the raising money is harder. It's just like overall the investor morale is so down because they wanted to hang tight to the money instead of investing because they don't feel confident if they're solely invested in multifamily. Because, we always talk about good and bad things, pros and cons investing in one asset class. And there's multiple risks, if you just pick one asset class, and if you're staying solely in multifamily for the past so many years, it might have worked for you in the previous years, but right now in the current economic situation, it could be like good and bad both, depending where you are. So what do you think about that? People who are just investing just in one asset class only, and now they are kind of fearful now about this whole market or economic situation. That's what is happening. You think they should be introduced to something beyond multifamily because there's multiple other asset classes within real estate. You'll still be in this real estate arena though, right? You don't have to step outside real estate, but you can pick other asset classes. So let's talk about that a little bit. What are your thoughts on that?
Usually tell my clients, who are syndicating real estate, is that, you don't need to sell, you need to educate. And it's really just about getting educated in, educating your investors and all the different things they could invest in beyond just traditional stocks, bonds, and the traditional stock market, and introducing them to the asset classes that And of course, everybody gravitates to, I think, multifamily because it's something that's so easily understandable, right? We've all experienced it, we've lived in apartments, we've had family members live in apartments, maybe we've owned some of our own single family and had some tenants in those, so I think it's just kind of an extension of our own, of owning our own home. We understand that model. When we start getting into some of the other asset classes, I think that there's a little bit of a learning curve. And, but the reason that I think I approached you at several months ago and said, "Hey, Vinki, let's do a virtual summit that's about everything except for multifamily," because in the last several years there's been a ton of multifamily conferences, but there's not so many conferences in other asset classes. There are a few, absolutely. But just not as many, and there's not as much diversity in what people are learning. And I remember how I got started. I started, boy, oh, I don't want to really tell you when I got started. I will tell you, I started a few years. And and at that time, I went to a huge conference that was at the Los Angeles Convention Center, and it was all different kinds of asset classes. And you could walk into any room. There were thousands of attendees there, and you could walk into any room you wanted. And this person was teaching you how to buy multifamily, and somebody else was teaching you, how to buy self-storage, or how to buy warehouses, and how to manage all those different types of tenants. And you could buy whoever's program you wanted. And I remember I went into the multifamily class, and that's kind of how I got my start. And it was great, but I'm still angry with my husband that he wouldn't let me buy the course from the guy that was teaching us how to buy abandoned mansions and fix them up. Now I can't find them anymore.
That would have been good.
I would have really enjoyed doing that. But so I just thought, well, why isn't anybody doing that now? Is everybody, just looking at one asset class? And then, we would see that there were a lot of our multifamily clients that were just, kind of frustrated and feeling like, oh, we can't find any deals, and they would lose interest. And, we didn't want that. And that yet we had all these other clients that were doing a lot of different other really interesting things. And so I just started thinking, well, why not start introducing, these people to each other, and letting them help each other out, and maybe just expand, our thinking that, we're not just multifamily investors, we're real estate investors. And my message to my clients in the recent past has been, every time you drive down the road in any commercial area, there's all kinds of buildings, and somebody owns every one of them. And it could be you. And you just have to learn that asset class and understand how it works and how to get tenants in those types of buildings. And then you can be successful in those areas as well. So it's really just, I think, my idea was to share that information with as many people as possible and help them understand that. And so I'm actually writing a book about it. I started interviewing people on our own podcast a while ago, all of our clients and other people that were doing different and unique things. And now we're putting that into a book, and then we're going to do this great conference.
Oh, that's pretty awesome. I'm super excited for our conference too, because it's an exposure to the other asset classes, because when you're investing in one thing only, is like you're putting yourself in a box. Basically, you're putting the limitations around you. Like some people, they like stock market. My husband, he loves stock market. There's no way you can take him anywhere else than the stock market. Now he's introduced to real estate. He does real estate with me. But other than that, he's like, no, 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 no. I just love stock market because he has that experience. And people like to stay at a comfortable place because when they're investing in something, they get comfortable. It's a multifamily, it's a self-storage, or it's a stock market, whatever it is, because this is something in your experience. So whenever you're going into a new thing, this is like a new train, something unknown, like you mentioned earlier, something that is not in your experience. You do not have the understanding. And the other thing that you mentioned was a learning curve.
Yes.
So when it comes like that, it's a learning curve, it's a new experience, it's a new terrain. So all of a sudden, people get cold feet. They feel like, oh, no, 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 I don't want to go there because I do not have this thing in my perception. So we're going to break all that myth. Investing is investing because basically, if you are a passive investor, you're hiring a company who is taking the deal from conception to completion and bringing you the returns. And if you're an operator, syndicator, or even a fund manager, if you're structuring the deal yourself, you're working with, super smart attorneys like yourself, Kim, and you're helping them structure the deal in a way so deal is going to fly from conception to completion. You're going to have enough support to do that. And that's the reason we are bringing this conference to people, and we want everybody to join and learn, and then try to understand the difference between investing in multifamily only or the other alternative asset classes, which is not much different. As long as you understand the model, the business model. Business model is basically, it is a business investing, whatever you're investing in. In multifamily too, it's a business. Because if you are getting loan on multifamily, the lender is giving you money because it's a business, because you're making a rental income. So based on that, not on your personal finances. So it is a business you're investing in. So you have to understand the structure, basic, base only. If you go into self-storage, let's talk about that. Again, self-storage, people need to rent the storage space from you. There's a rental income, right? Very similar to multifamily, but at the same time, much easier to manage because you don't have to deal with the tenants or toilets, right? I mean, you have the tenants in a way, but it's more like on the storage side. It's not kind of day-to-day kind of thing that you're dealing with. And these days, you can automate multiple things in the self-storage too. So it's easy to manage, right? Less management, more income. More income means more return on your investments. So this is the self-storage. And then similar, if you wanted to invest in industrial, I would like you to talk about that. So if you can tell about us, the triple net, lot of similarities again. You're going to have tenants there, right?
Sure, sure. But you just have to understand that it's a different kind of tenant. You're not
Exactly.
with individuals, you're dealing business to business. And in order to successfully, if you want to build a single tenant in retail properties, then you have to understand what kind of businesses want them, and maybe even align yourself with one of those businesses and go out and build in an area that you already know meets their criteria. So it's really about making relationships with the kind of companies that will come and populate your property, and then asking them, what are the demographics? How big does the area need to be? What has to be the traffic count? What are your square footage requirements, parking, all of that. And once you understand their criteria, then you can tailor what you buy to those tenants, and maybe you even find out that, hey, they're looking specifically for something in your area, and now you know where to go and look for, and create something that works for them. And once you get those anchor tenants in some of those retail properties, then the other tenants come, because they know that you're already bringing, maybe it's a grocery store, right? You're going to be bringing a certain amount of traffic there every single day, and that they're going to get some of that overflow traffic from that, and they want to be near those kinds of businesses. So you really just have to understand that model, understand who to connect with, how to connect with those people. And so it really helps when you have a leader, then somebody like the speakers that we're bringing into our event, who can kind of guide you along in that process so that you're not out there trying to figure it out all by yourself.
That's true. And then especially in the triple net, you have absolute triple net. Sometimes, a lot of times, I would say not sometimes, you don't have to worry about anything. And these leases are very, very long, like 10 years, 15 years with, three, maybe 10-year extensions, like 30-year long lease, basically, versus as a tenant, every year you have to get a, new lease in the multifamily. So that's a benefit right there too. And most of these projects, whether it's industrial or storage, they still have the same timeline for the exit timeline. They 3 to 5 years, 5 to 7 years, but maybe better, stronger returns or solid returns, a little bit. But it's just like, you're increasing your perception, you're bringing something into your experience. And that's what we're trying to do, right? So in today's date, what do you think, which is the best performing asset class that you're seeing?
I don't think any one outshines the other. I think the best one is the one that you learn and you invest in. It's like, that's my theory about the best college for you is the one that you actually go to, because none of the other ones did me any good. And so, it's really just learning the asset class and realizing what its parameters are. And some, perhaps a triple net lease, maybe some of them don't offer the same kind of returns that you would see in multifamily or some other types of asset classes, but it's a lower risk profile. And so you have, perhaps it's a perfect time to introduce investors that are a little nervous right now into those asset classes, saying, we've got a 10-year tenant in here with a high credit rating, and they're unlikely to default on this lease. So why don't you come in with us? Maybe we're going to offer you a lower return, but it's going to be steady over that period of time, and you don't have to worry about doing anything. There's no uncertain maintenance, repairs, or costs, or things like that. And it maybe helps some of those investors understand that, oh, I don't only have to invest in this type of thing, which makes me a little nervous at the moment for whatever reason, but I can invest in something else that's maybe, they perceive as a little bit more stable and reliable at this particular moment in time. And, the thing about real estate is it's very cyclical, right? It goes up, it goes down. But the thing is that it goes up and it goes down, but it always goes up higher. And it goes down and it goes up higher, and it goes down and it goes up higher. We've actually done a report. We had our professional editors in-house write a report called 100 Years of Real Estate Investing versus the Stock Market. And what we saw was that the stock market just, kind of went along, but the real estate always did up and then higher and higher.
The spiral. So it's a spiral. It's going up every time, not necessarily going back to the same ground zero.
I mean, look at what real estate cost 100 years ago and look at what it costs today. Clearly there's a difference, and you just have to ride it out. And a lot of people are riding it out right now, but that doesn't mean they need to sit on the sidelines. They just need to, it's like, you're learning a new trade. Anytime you learn a new trade, you need to expand your toolbox, expand your contacts, what and just learn. And once you understand and learn, then the fear goes away.
That's true. I agree with you. It's just like bringing something into your perception, like you were talking earlier about all about experience. Like something is not in your experience, you won't see it, you won't recognize it. Like kind of, everybody uses that analogy, once you buy a red car or you want to buy a red car, it comes to your mind, you'll see red cars all over the freeway, all around you, right? So something like that. So it's bringing something your perception. When you bring the self-storage or the mobile home park or maybe hotels, all of a sudden you'll see a bunch of people are investing there. And
Yeah.
then they are making good returns, they are super happy, and that makes you learn a little bit more into that arena or move into that arena. So
Yeah.
and the question comes to my mind is a lot of times, it's like a more like investor or the syndication question that I'm going to ask you since you're a syndication attorney. So when you're structuring these deals, when you're syndicating like the hotel versus multifamily or self-storage versus multifamily, what is the key difference? Are you structuring the deals differently, or the capital stack is different, or what is the major difference?
If the as far as what you're offering investors, it really kind of depends if there is an operating business at the property, right? So if you have an operating business, if you're going to be hiring employees per se to run that facility, then you're going to need a third entity. Typically, we'll structure a real estate offering with two entities. One is the asset management team, and the other entity is the one that's going to hold title to the property and offer the interest to investors. And then if you're going to also have an operating company there, such as assisted living, right? If you're doing an assisted living project or a hotel or any kind of other asset class where you're actually going to be running a business, you can either lease the building to an operator who will do that, so a third party, or you can create that company and put together that team that hires and oversees those employees at the building and helps generate additional profit for those investors. So, there's always some little nuances as to whether are you going to, run the company yourself and then also own the building, and are you going to consolidate those profits and share them with investors, or are you going to just lease the building to an operator and then the operator maybe shares profits with you or something, or however you decide to structure your lease agreement with them, then there's a way then you can get your investors their share of profits from those lease agreements as well. So it really just depends on what the syndicators want to do with their comfort level. And maybe sometimes for the first one or two, just like in multifamily, what we see a lot is that people will go out and they'll hire third-party managers. And then if they have great experiences, if they happen to be lucky enough to be in an area where the property managers are fantastic, they never bother creating their own. But if they go into an area where they can't find a property manager that runs the property the way they want it to be run, or they're not running it profitably, and they're just having challenges with that property manager, then they often end up creating their own separate property management company. And sometimes that's just a third-party property manager that just earns fees from the project the same way as you would pay another property manager, or they could actually decide that that property management company is also going to share some of its earnings with the investors. But it's more typical that they would create a separate company and then just charge the same rates to their investors that a third party would. But for residential assisted living, we see people doing it both ways. And always for the first one or two, maybe you want to hire an experienced person to run it for you, or team with an experienced person who can run the business, help you learn how to run the business. And then later on, you can decide whether or not that's something that you want to use to sweeten the pot for yourself and your investors.
Yeah, I like that. And in a nutshell, what you're saying is, I'm going to simplify a little bit more. You just create or write your own story, for each project, whether it's industrial or self-storage, multifamily, hotel. So you got to have your vision, as an operator or a syndicator. So you need to create your story. Like, this is the way I wanted to run the business, and this I need to complete this project. Basically, the end result 5 years from now, 7 years from now, you're creating that vision, and you're creating a GPS system and bringing in all the bells and whistles together, keeping the investors in mind, because investor comes first. You wanted to make sure that's an investor favoring deal because they're getting the most of the profit in that, because they are the huge contributor in the deal. So you wanted to always keep their interests first. So investors should pay attention to that too when they're doing their due diligence, if the deal is investor favoring or the general partnership of favoring, because that give them more confidence, not just going blindly into the deal. But thank you for sharing that. And then, but other than that, the basics are the same when you're structuring the deal, regardless whatever the deal size or the asset class, because it's your story, or I would say it's a syndication story basically for each project. It could be similar, but somewhat different as well, you know. And let's talk about that. I'm sorry, go ahead.
Well, there's also a difference between whether you're doing a development project and, or are we buying something existing that's already in, a top condition, or if you need to make some improvements to it. Yeah.
That's true. Yeah, I know. I agree on that. I love development projects actually, and especially in today's date where the replacement cost is much lower, you know, going in. So I have completed one in January. We just closed on the loan on that one. That's actually in Opportunity Zone. And I'm launching the second one this week, which is it's not in the Opportunity Zone, but it's going to give us tax credits. It's the affordable housing. So when you're doing these kind of projects, it's a different asset class within multifamily affordable housing, because it's built differently, structured differently, and it's actually resolving a need. So those are like very much high interest for a lot of people, because again, timeline is going to be same 3 to 5 years or 45 months. Exit, you're looking at it, but the returns are like really, really good. And then people have confidence in that kind of asset class, because it's something that you're doing for the community. You know, you're solving a need, affordable housing.
Yeah.
Yeah, let's demystify some of the challenges here, you know, investors they have. What are some of the biggest challenges people face when they're transitioning from multifamily to this alternative asset classes? Do you know any, or have you heard about any?
Yeah, well, it's just, first of all, there's a lot of different asset classes that there's nobody out there teaching, right? So
Mhm.
how do you learn about them there? Or there's maybe only one or two people teaching if you can find them, and maybe they do one event or two events here or there, but you can't find the information when you need it. So I think that's probably the biggest challenge for the active investors is the knowledge gap, right? Getting past that knowledge gap, connecting with people that have already done it before. You don't have to buy somebody's coaching program. You can just connect with and invest with, or co-GP with somebody who's already doing it. Bring something to their deal, bring some of your investors to their deal, or help them find some deals and become part of their team for a couple of deals. And then pretty soon you'll know how to do it yourself. So, you can learn through mentors, and you can learn through paid coaching programs. And there's just not a lot of other coaching programs out there. I mean, there's certainly some in the self-storage area. And there's different conferences you can go to, but as we all know, conferences, it's expensive to go to a conference. And
Mhm.
not everybody has the ability. Maybe they have a regular job, they have to stay home, and they can't go travel all the time. So sometimes it's, the logistics just don't work out for them. So, that's why we want to do a virtual conference, so that
Mhm.
you can be there, in person, and and listen to these people. You can ask questions, and even if you can't be there in person, then you can buy the VIP pass, which is very, very inexpensive, and get the recordings and listen on your own time. So I think we're just really trying to expose as many people as possible, and just get you to think outside the box. I'm not just this kind of investor. I am just a real estate. I am a real estate investor, and I invest in real estate that makes sense. And then start
Mhm.
looking around in a different way as you're driving into town.
Yeah, I like that. Thank you for saying that. And then, it's just like you said, thinking outside the box, number one, and expanding your horizons within real estate, though. We're not taking you outside of real estate. Yes, some oil and gas, because you get a lot of tax credits there. Because what if you make tons of money in real estate? How are you gonna save taxes? Oil and gas. So we wanted to bring that asset class into our conference as well to get you some exposure there. And our conferences, I think, is for everybody, right? For syndicators, fund managers, investors, people who are looking to structure new deals, starting ground zero, experienced people, savvy people, anybody and everybody's welcome, right? Because it's gonna be kind of whole enchilada, I would say, or a buffet. You can pick and choose, what resonates with you. And then what do you think? What is gonna be the takeaway, key takeaway for people from our conference?
just think, walking away feeling confident that, here's somebody I could reach out to if I see an opportunity in my area, or if, for lease, for sale or lease sign in front of this commercial building, and I'm not sure what to do with it. And, there's somebody at that conference you're going to be able to connect with, or you could call them and say, hey, I see this opportunity. I can see the zone for this. Would this be something of interest to you? And, what I always say is when you're reaching out to new people, and try to figure out what they need and then bring it to them. Right. Because if you want to team with somebody, figure out what they need and you bring it to them, then they're going to be welcoming you to come and join their team. So, you're not asking them for something, you're asking, how can I help you? And once you have those conversations, then I think you're going to open up new worlds with people that are doing new and novel things. And it's just going to make you feel better about it. But you also mentioned passive investors. And, you don't have to convince your passive investors. Get them to come to this class and learn how they, how these other opportunities work, because they're, maybe they're going to see some other people that are doing it or teaching it or something like that. But don't be fearful. This is a time when you just want to help expand their horizons, so that when you come to them and say, hey, we have decided that we're going to, invest in this particular opportunity, then all of a sudden they're not feeling like that's foreign to them and they don't want to do it. The other thing I think could really happen for a lot of people and just be a big light bulb is all of a sudden, instead of feeling like you have to go across the country to buy something that makes sense, you might be able to look around and say, oh, I could buy that, right there in your own community. And now you understand how different types of deals work. So you may be able to find some opportunities closer to home.
Wow, I am seriously excited about this conference. It's going to be a lot of golden nuggets, a lot to learn, and 3 easy steps, by the way. You go to gobeyondmultifamily.com and then click on the link, buy a ticket. You can buy the free ticket that we're offering right now. And also we are offering a 20% discount on the VIP ticket where you get the recordings. And also you will get a copy of the Kim's book, How to Legally Raise Capital. We are offering that with the VIP package. You can get that and plus 20% off. So 3 easy steps. Go to the website, gomultifamily.com, click on the ticket and buy the ticket, and we'll see you there. So any final words of wisdom, Kim, that you like to share with us?
Yeah, just go there, go beyond multifamily.com. It's, the website is great. You'll get a lot of additional information there about what we're trying to accomplish and what kind of speakers will be there. We're adding speakers all the time. So, check again next week and you'll see even more people. We are just super excited to be putting this all together. I think it's the time in our lives that we need to just have as broad of an education as possible, so that we're not constrained by anything, by geography, by market conditions. None of those things can hold you back anymore, because now you know how to do something else if one thing doesn't make sense right now. And, for all you multifamily investors out there, we are not down on multifamily at all. Multifamily is far from dead. It is not. But we want you to understand that you're not stuck in one area. Now, I will caution you this. It's going to be real easy to go chase the next golden nugget, right? So, the idea is, find a mentor, find a coach, get good at something, do it, try it. If you love it, get great at it, and then go on and do something else. But don't try to be a jack of all trades. That is a little bit challenging in this, in the real estate field. So we've written funds for people before where they try to do everything all in one fund, and it becomes very challenging for them to raise capital unless they have people on their team that already have specific experience in those fields. So if you don't have the experience and you want to get on somebody's team, come meet our speakers, come meet our sponsors, see if you can connect with some of those people. We're going to have some great networking opportunities, and, just get connected and figure out how you can help each other, and, everybody will be better off for it.
We are very excited about our upcoming event, Go Beyond Multifamily. So please go to the website, gobeyondmultifamily.com, and get your tickets today. We are offering 20% discount on the VIP tickets. Please go ahead and avail that too if you're looking for the recordings. We'll see you at the conference. Kim, would you like to add something to it?
We're very excited about our upcoming virtual conference, gobeyondmultifamily.com. Go there and get your free tickets today. There's nothing holding you back from doing that. And if you want to buy the VIP pass, you can't be there on the days that we're actually having the live event, then you can get the VIP pass and get all the recordings. And there is a 20% discount code for that. It's Summit20. Summit20, put that in when you're checking out and you'll get the 20% off discount, and then you'll get access to all of the recordings so that you can hear all the great speakers in your own leisure time, and you can connect with them later if you want to.
So we'll see everybody at the conference, gobeyondmultifamily.com. Sign up today, get your tickets today, avail your 20% off with Summit 20 if you are looking to buy the VIP ticket and get the VIP experience. See you around. Thank you everyone for tuning in to the Real Estate Vibe Show. Don't forget to subscribe, leave a review, and share this episode with anyone looking to elevate their real estate investing game. Until next time, stay focused, stay inspired, and keep building your real estate vibe. Thanks again.